Okay, we are getting close to the end of the first quarter. So I'm reviewing my account and in particular my option trades, of course, and everything seems to be working out pretty well. Uh, if we look at the S&P 500 for this year so far, let's see, we began. Let's see, where are we? Right here. Okay. So somewhere along here. So I don't know, around 3,700. And we are currently at 39.32. So that's like 5%, 5 or 6%. So I would say that's been pretty bullish so far this year. And with these trades, with these option trades, put selling, uh, they reflect that. Okay, so selling puts on stocks you want to own, that's a bullish strategy, obviously. And for this account, I kept all the same stocks, of course. Have had a couple of issues with a couple of stocks. Um, ARCG, CRISPR, and Dollar General. So far, those three are down for the year, but everything else is pretty good, doing good. Altria is a standout, and Exxon as well. So you're not going to win on every single trade, and the reality of trading, we have a bullish market, so yes, you're going to have a positive result in your account, and it's for the next quarter, who knows? It could be down 5%, could be down 20%, whatever, and that'll show up in your account as a negative, of course. So in no way is this a, you know, no way can this predict the future. Okay, so but that said, all these stocks I trade because I do want to own, and I do trade far out in time, and um, far away from the money for the most part. As you can see, American Airlines is, I've been trading this since the crash, and I'm down to one contract, and this one is expiring in August. I sold a $16 put for $196. Okay, so and this is getting to be about halfway, so we're at like $95 profit on this. My next and final trade with this stock will be to roll it up. So I will be buying back this $16 put, and I will go out to December and roll it up to $20 and collect around $222. And that should be it for the for American Airlines. I think I will remove it from my portfolio after this year. I'm obviously still bullish on airlines because they have continued to ride higher. And hopefully, if the economy opens fully in every state, um, these stocks are going to go through the roof, I think. American Airlines, Carnival Cruise Line, even stocks like Boeing, they will advance higher. And yeah, so I'm still bullish on it. And what I'm losing on here are a few stocks, ARCG, which I roll down to $59.21. They kind of, what do? They split or something to make these strike prices a little bit off. But anyway, that's besides the point. So I'm down here. I would own it at 59.21. I collected 191 bucks, way away from the money. It's showing a profit now of $40 so far, but I'm looking to just get back to break even on it, as well as CRISPR, which is not doing well at all. So here we are again. I'm at a loss at this one. Oh, what am I down for the year? I'm down 860 bucks for the year on this. Okay, so I'm trying to recoup some of that. So this trade is worth $295, but it is down, as it shows, 140 bucks currently. I sold an $80 strike, so I would own it at $80, 100 shares, and we continue this downtrend, which has been brutal. This has been brutal. What would I do? I think I might do something like this, where I'll give it one more shot. I'll adjust it lower, and I'll go further out in time, and I will add an additional contract and end up with a credit. This is going to be $25 credit, and I'm not ready to do that, by the way. I'm not ready to make that trade, but that's an example of what I might do, and recapture that loss and take back that $295. So that's what I might do with CRISPR. And what else? Dollar General is the stock. It has been all over the place, but I'm down on the year, 340 bucks. And this thing is a little psychotic here. 225 down here to 175, 174, and now we're ripping higher and recovering some of that loss. This particular trade, I mean, I had to roll it down to 175 bucks, and currently up almost half. So we're doing pretty good. Okay, and I just put this trade in down here. If it had continued lower, you could, I mean, this is just like a last ditch effort. What I would do is I would buy back this August 175 put and go down and sell. Well, I'd go out to January, right? I go out to January, and I can roll. I could even go further down. I'd say 140, 140, 135. Yeah, I can go down to $135 and still collect a little credit. I'd be selling 2 contracts, but as of now, I don't have to do anything like that. This is similar to what I would do for that CRISPR trade. But other than that, everything else seems to be working out very well. Let's see. FedEx is doing fantastic. They had an awesome quarter here, and it's riding. Well, this trade is down 20 bucks, but I sold this for $408 the day that earnings came out, and that was on the 19th. So it's been about, I don't know, a week or so. So I sold here. What did I sell? I went to October and sold this one here. This is a 10 delta, so it's about a 10% chance of expiring in the money or getting to that level. I mean, it could definitely touch that, but I'm really bullish on FedEx, with that quarter they just had. So I'm hanging on to that. And here I am down here at 200, $76 above the money. So Not too worried about it, but that's what you would do. You'd get your here you have just to go over some of this. You have all your you get all your option chain here showing all the different months you could trade and how many days are left in each trade, and everything's based on 100 contracts. And you can see this little red flag here. This shows my short position. I'm short one contract, which represents 100 shares, right here at the $200 strike. And I collected about 400 bucks on this trade. Okay, $408. And yeah, that's how you do it. You just put a sell order here and just limit yourself to one contract normally, and you would execute it, and you would hold it for as long as you get to about halfway, half of that profit. And but what I do is I would just roll it to the next month, or I would roll up the strike price and keep the same month. It just depends on the direction of the stock. So that's what it is. And in this market where it's been pretty bullish, although it's been a little volatile lately. Yeah, bullish market is a good thing for put selling. So it's not like you are a superstar here because you made some money. But if you, like me, want to keep stocks, you want to own stocks at a certain price, this is a good strategy. And that I would recommend that if you or anybody was interested in this sort of strategy or option trading in general, is to open an account. I use TD Ameritrade, Thinkorswim, and I would download this desktop and have this on my computer, and I would paper trade. You could paper trade, and you could practice, you know, as much as you like, and you could see how trades would work out for you, and in all conditions, bullish or bearish conditions, and see how your trades would react, and if this is something that you would feel comfortable with. And I think it's a great strategy. Now it has to be in combination with your overall portfolio. You're going to have, you know, well, I have real estate, REITs. I have closed-end funds, and as always, I have a hedge on, in general, for the market in case the market tanks, and which is kind of like a buffer to a certain extent on these option trades. And that is what I would do. And this is obviously for your risk capital. And if you have a pension and you have a Social Security payment every month, or you have some sort of investment property where you're making a positive cash flow every month, this is for your risk capital only. This is in addition to all that. So try it on paper, see if you like it, and you can make these trades. And it's really not a complicated thing. You just gotta just do it. Just do it. Iron Mountain's working out pretty well. Had that trade for a while. Johnson and Johnson. This one's up 106 bucks. I made this trade for $312 on the 18th of March. JP Morgan. Still, I'm down here at $110, And here we are trading at 153. This trade for $302 made on the 18th of March. Still working out. I mean, it's it's still pretty fresh. It's been a little rough for the financials. Marriott, this stock I've continued to hold. This one I recently rolled up, I think. Yes, on the 12th of this month, collected 495 bucks, and we're doing pretty good here. Marriott, Philip Morris has been a superstar for me for this account, and I think I was trading 4 contracts. I had it up to 4 contracts, and I recently rolled it up. I think I rolled it up from the $45 strike up to the 47.5, and I took off that 1 contract and brought it back down to 3 contracts. So I'm short 3 at 47.5, and this expires in September. And this trade is working out, and I will probably I put this trade in. So if I buy back these $47.5 strikes, $45.5 options, I will buy them back, and I will short 2 $50 strikes and staying in the same month of September for a slight debit. I could do that. Whereas this profit open is 577. It's almost halfway, so we'll see about making a trade in that soon. And yeah, just continue on down. Northrop Grumman performing well, finally getting bullish. Oh, today's not a good day on it, but it's down $5 today, but no big deal. So anyway, you can see what I'm doing. Just do it. Paper trade. Go for it. Don't be shy. Ciao.